Good morning, everybody, and welcome to the Morning Volatility Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to, let's just call it Sideways Monday. But first, before we do that, I'd like to get to our event, which is not this Saturday, but next Saturday, the 24th. We're going to do some daily options trading. I'm tracking them now. We're going through, so is Mark, and we're going to look at what could be interesting in them for us. I think there's a high delta that they're going to start listing like a Monday and a Wednesday and a Friday, a Monday and a Wednesday options on the largest, most liquid ETFs and stocks probably within the next year after the pilot program goes off. The SPX has been trading pretty well. The SPY is now trading. We even had some clients selling some put spreads, I think, on the SPX for today, which as of right now look pretty good. However, but again, it's another product with another quirk, so we spent a little time trying to figure out how it works. But again, it's an option, so we should be able to figure out at least how it works, and then maybe try to generate some trade ideas from that. Okay, so that will be on the 24th. If you just take our gold class, sign up for our gold course, which we are going to be teaching live. We will have notes go out for that. We're going to do it live again for the next 10 or 12 weeks on Mondays. For all of our current gold members, you get it just because we like you, and new gold members, you will get going on that as well. Both Mark and I will teach the class. So you're going to start seeing some more notes about that. I'd like to start it, it's the 12th, probably last week of September. Okay? That way everybody can kind of, if some of our current clients, make sure we can, some of our current clients, I want to make sure they can clear their schedule for it. I want to get the right time for it. So it will be on Monday evenings. And with that, let's go on to the markets. Okay. I don't want to. So I think one of the biggest trades I think is this week's volatility. I think should be sold. I think you want to hold on to whatever the Fed says. You buy this cycle, sell this cycle. You're going to see some news today. The only thing today will be is a balloon floated by a Fed governor. I don't see how this vol stays up. You just got to make sure there's enough room. We looked at a trade on this on Friday with Mark. Think we have a good one, but I still think that's kind of I don't see how they're really going to take the vol out a ton until there's actually some news. Mostly, I think this is the ECB. They put a date of March 2017 out there, which is 9 months away, barely. And I think what that's saying is there's going to be less QE, and I think they're trying to wean the markets off the concept. I'm not a tinfoil hat guy, but I still think all the Fed guys have basically said, okay, we can't do any more monetary stimulus, and we have to try to get ourselves out of this. So we'll probably take the next 2 years doing that. So the U.S. will do its one thing. Maybe the Europeans stop buying bonds. I don't know how many bonds they have left to buy. And then let's see what happens in Japan, and we try to move on. The closest thing I could think up to this was the do you remember that kind of bond temper tantrum we had in 2013? That is the closest thing I could think of for something similar, right? As like, how did the market really react to what was going on? I mean, I gotta dig back in history here. I believe, right, it was like this little spot, like right here, started in May and kind of worked its way down until June. We went to 159 low from I'm going to say it was like a 5.5% drop, maybe more. I'm pretty sure it was 2013. I don't see anything really close here in 2014. I'm still trying to remember. I got to go back and look at some notes, but it's one of the two. And ultimately, the Fed said stuff, and they charted some sort of course. I think Bernanke was probably a little better at saying, this is what we're doing, and then he kind of stuck to it. So far, I think we have a lot of back and forth out of Yellen. But if you're looking, again, both those drops, our rate course seems to be relatively, although the Fed does a lot of machinations weekly, it's still like one or two raises. They're not very big. But it still makes the market unsettled, clearly, and that's what we've got. What we are seeing today, though, and to me, volatility is still the best indicator of what the market thinks about things. We opened, I think, almost the 19, almost 20 handle in the after hours. Couldn't hold 18. I think if you had some long vol positions, we put out a couple of notes prior to the open, like, hey, if you're long vol and you were writing it up, you should be getting rid of some of it, at least, chunks of positions out there. Because, like I said, I think our rate picture is it's set. You got one or two rate rises this year. The ECB, they have to deal with their stuff, but the U.S. has kind of been slightly separate from that. So if you own the vol, I would sell it. I think this is an opportunity probably to maybe to backspread some volatility, call spreads in an index and puts in a VXX or UVXY, something like that, where, the thing is how low vol gets, how quick they take it down in the short term. We'll have to just look at that in our chat room. As far as individual names, it might be a good time to pick up some stuff like, like in Intel. I think the banks have pulled back. I think they're all, especially if the rate thing's going to happen, banks should do better again. So you're getting a little chance on the pullback to reload those. I don't think it's a bad idea. That's still my favorite play till the end of the year because, like I said, I think the rate picture here is they're going to go up maybe one raise, but it's still going to go up. It's just not the time. So, and I think you're even seeing this now as we look. Things are at least kind of stabilizing. They're starting to take the vol products down quite a bit. That's what we got. So, be mindful of the downside. Take some profits in any upside vol you might have had. I think ratio put spreads on the banks, maybe to finance some upside calls, are going to start looking good because we got a good pop in vol. You might as well sell some. And with that, I'll see a lot of you in our chat room. Don't forget our Saturday class. If you're a gold member, you get them for free, or actually Option Pit Live or above, you get them for free. And with that, I will see you all a little later. All right, bye-bye.